Hi, this is Amir with the weekend edition of the Bulletin Board Heroes. It is Sunday, the 2nd of October, and an interesting setup here for the FTSE 100. I suppose it's difficult not to look at the current setup here with the recent peaks near 7,500 and the break of 7,000 as almost a repeat of what we had back in beginning of 2020, even that last pattern there with the rounded top and then the spike and then that failure does seem to be rather similar to that sort of January, February, going into March ahead of that pandemic decline. The hope at the moment, though, is that having broken out of that two-year uptrend line, we don't go actually much lower than retesting the old March support area. That was around 67.87, so I suppose we haven't been too far off that. Worst case scenario at the moment, worse in inverted commas, is that we hit the bottom of the March trend channel there towards 66.70. But obviously, there is the risk of some kind of repeat of that pandemic decline that was there, just because of that rolling top type of price action that we've had for the bulk of 2021, 2022. So let's see how that goes. In terms of the upside, really need to break back above the 71.30 level, which was the old initial September support there. If you're fussy, or if you're keen, then I suppose the earliest would be an end of day close back above 7,000, the psychological level, and also just around recent resistance. But FTSE 100 in something of a mess at the moment, especially with the 50 and 200-day lines both falling now in parallel after looking quite encouraging even just 2 or 3 weeks ago. Moving on to Bitcoin, which has made some noises in terms of recovery in recent days. The key here is that it needs to break that November resistance line, top of that November falling trend channel. Every time it tries, it fails, so it's done that again. We had a failure back earlier this month. We failed below the 50-day moving average and right on that line yesterday, i.e. on Saturday. Support for this market between we're 18 and 19,000 now. That breaks, then we've got the risk of a move down to maybe the mid-teens, but at the moment, just evenly balanced, I suppose, between breaking to the downside and breaking back above the November resistance line, even though we've failed many times at that November line, and also the way that we've got the 50 and 200-day moving averages both falling. But RSI slightly positive, but really in a holding pattern near the lows for Bitcoin. On to the pound, where I think you can rejoice at the way that the media has not been able to get the pound back below parity or to maintain record lows. So the hysteria that came through after the tax cuts actually resulted in this market getting back within that falling trend channel back above 110, and above 110 we even have the possibility of heading back towards 115 and 116, which is the 50-day moving average, which would rather change the narrative as far as the media hysteria is concerned. Otherwise, below 110, I suppose at the moment the worst on offer would be a partial or a retest of the 103, 104 area. But for the time being, it looks as though the worst is over, fairly on the basis that the RSI went down to around 15, 16, and we have been very oversold there, and this currency or this cross doesn't stay that oversold for that long. Moving along to the stocks, and happier picture for Ascent at the moment. Here we've got this what looks like a mid-move breakout. We've got that old resistance, the initial, the August resistance there at 6.2 pence. Be nice if we can get back above that quickly, but you can see here the whole recent rally started with an unfilled gap to the upside, still unfilled through the 50-day moving average around 3.6 pence back at the beginning of August, and that is probably one of the best setups that we've got on the market. Unfilled gaps off the low tend to lead to very strong rallies, and you could probably only trade off those situations and do rather well in life in terms of technical small cap trading, but maybe that would spoil the fun of all the ones which are not that easy. Above the recent support area around 5.5 pence or 5.3 pence maybe for a stop loss, then we're looking at the top of that broadening triangle from back in April last year as high as 9 or 9.25 pence as soon as the end of next month. We've got that long uptrend line in the RSI window as well, which is also supporting these shares. So it just does look pretty strong, even though that might not be very intuitive at the moment. Moving on to a stock which just looks as though it's finally ready for a turn. Here we've got African Pioneer just breaking that line of resistance from May there. 50-day average, moving average starting to rise as well. So initial target here towards 3p, which is post-May resistance, maybe over the next 4 to 6 weeks, something like that, while we remain above 2p. But just as I said, with the tough market conditions at the moment, it's always good to point out situations have actually broken a negative trend. Company that I've written about and interviewed this week and has got me quite interested is Boku, because I've never heard of it before. Here we've got that unfilled gap to the upside off the low and rising 50-day line as well. So this looks like a quality play in terms of the technicals. Shares did do that before back in July, and then we rallied from 89 to around 110, which is nothing to be sniffed at. This one looks like it's a rather better move, especially after the Amazon news. So looking for 120 here at the 200-day moving average over the course of the rest of October. Onto a stock which I didn't really want to include, but difficult to resist this one as well. Here we got Eden Research, and again, an unfilled gap off the lows to the upside, and we're actually sort of floating in midair at the moment, above old resistance of 4.2p, and just below the 200-day moving average at 5.25. End of day close above 5.25. Could see the shares head up to 7p, hopefully over the next 1 to 2 months. And that's especially the case while we hold above that 4.25p area, maintaining the top of that gap to the upside. Onto a stock which I called higher a little bit, I think a couple of weeks ago, but we had that drift back from 12.5 down to 10.5. Not really material, but slightly disappointing that the shares didn't take off then. Looks like we're in a rising trend channel for first-class metals, heading towards 17 or 18p. See the way I've drawn that channel, and ideally we stay above the 10.5p area, maybe allow down to 10 on a mid-close basis, and ahead of a move towards 17. But not many stocks in an upward trajectory at the moment, so that is a bit of a standout. Speaking of upward trajectories, we've got i3 Energy next, and here looks like the shares have found the floor of a broadening triangle there, so just basically bouncing off old July support there around 22p earlier this week, or last week rather. And also we've got this MACD indicator buy, and basically looking to head towards the top of this channel. We've been waiting for this for quite some time. I suppose it's been about a month or two delayed. We should have gone up there back in August, but obviously the market's not been great. So up to 40 to 42p, maybe over the next 1 to 2 months for i3, we can get a decent weekly close above the 50-day moving average, currently around 26.5p. So looks like a resumption of the uptrend there, but been a great year already for i3. If we can end up the year on the highs or making new highs near 40p, I think there would be no complaints whatsoever. Moving on to another oil and gas play, Jersey Oil and Gas, almost doing the same thing as i3 at the moment, so bouncing off a support line there, which is not quite in the right place, but there we are. It's a bit better. Support line there from February, and basically breaking a resistance line there from June. Above that, and the rising 50-day moving average of £2.50, we're looking for another broadening triangle target, which is quite ambitious, up to £4. Maybe by the end of the year. Obviously, the end of the year currently looking there as though it's quite a long way away. But nice setup there for Jersey at the moment, especially while we're above £2.50. Finishing off the trio of stocks which seem to have resumed their uptrend, we've got Kistos, which has bounced off a February support line there. That was, I think, the beginning of last week, so the low there, 407. Managed to break the recent support on the way down around 460, so above 460, looking for the 50-day moving average at 528, and a broadening triangle target as high as £7, hopefully well before the end of the year, maybe by even the end of next month if we are lucky on that. Just watch that MACD indicator, see when it crosses for a buy, but it looks as though, according to the RSI and that support line there, we've already had the rebound, which is why I like using these particular indicators. Onto OPG, which I suggested might be ready for a turnaround, and we closed well on Friday, just above that neckline resistance post-March, and basically looking for the shares to continue a turnaround there. We had the like a U-shaped turnaround looking for 9 or 10 pence over the next 1 to 2 months, the longer we stay above the 50-day moving average at 6.25. 3 stocks to go now. First one is Pensana, and here you can see that this looks like it's also bounced off a support line there. In this case, I suppose one from back in March. The initial target here up to that main resistance line there from October last year at 62 pence. Let's see if the shares can finally break that downtrend that's been in place for the best part of a year. Got an uptrend line in the RSI window, which should help things along, and so looking for 70 pence plus, maybe as soon as the end of this month, i.e. October. A stock which is probably one of my favorites at the moment, probably everybody else's favorites as well in the small cap area, Prospex. Great end to the week there. A breakout through the old resistance, 8.9 pence for September, the old resistance, finishing the month on a high, and just makes us more confident that we could hit that 14 to 15 pence level, maybe as soon as the end of this month, but maybe give it into November if you're cautious. I'm trying to work out, well, you've got that support line there, and also that would tie in with the upper parallel there for the 14 or 15 pence area. So looking for 14 to 15 while we're above recent support around 7.25 for Prospex. Finishing off with just a couple now. First is San Leon, where looks like after a bit of consolidation that we've had since the shares came back in July, double bottom there at 34 pence, 33 pence, and a rising 50-day moving average, just breaking that resistance line there from August. So the lot more price action we get above 40 pence, the greater it looks as though greater the chance of hitting 46 pence over the next month or so. Got the RSI rebound and also the MACD signal cross as well. So it looks as though at least above 38 pence, we'll get a breakout for San Leon. Finishing off with one of the better situations of the last month. Again, I think the third stock which has had an unfilled gap to the upside off the low, which is always, normally very healthy. Rising 50-day moving average as well. So above the 200-day line at 67 pence, looking for the low 90s up to the top of that broadening triangle for December on Transense. As I said, if you just stick to stocks where there have been unfilled gaps to the upside off the lows, you could do reasonably well, but maybe that's for another video. That's it from me today. More updates during the week.